Get ready, because the news cycle is absolutely exploding, and you're getting the inside track right here, right now. We've got major moves shaking up the financial world, with strategies that could redefine how big players operate. From innovative Treasury plans making waves across Asia to critical market indicators flashing red, this is the information you simply cannot afford to miss. We're diving deep into the data, uncovering the real impact, and bringing you the unfiltered truth on what's happening. Stick around, because the updates are coming in hot, and you're about to get the full picture. First up, we're talking about Metaplanet and their bold Bitcoin treasury strategy that's creating serious buzz, particularly in Asia. Is this the move that unlocks massive institutional adoption for the region? We've got the details on how this play could be a game changer. Then, we're breaking down the latest Bitcoin market signals. Some key metrics are showing a significant shift, suggesting a potential correction is brewing. We'll analyze what this means for the price and what to watch out for as the market navigates these choppy waters. Next, get ready for DDC Enterprise's audacious Bitcoin gamble. They've gone from holding a modest amount to a massive treasury in just a short period. What's driving this aggressive acquisition, and what does it signal about their confidence in Bitcoin's future? And finally, we're circling back to Metaplanet, this time focusing on their significant $881 million Bitcoin investment as a strategic hedge against a weakening yen. We'll unpack the implications of this massive financial maneuver in a shifting global economic landscape. Don't go anywhere, you're watching the Bitcoin Bulletin, and you need to hit that subscribe button and ring the bell to stay ahead of the curve. Asia's institutional adoption ignited. Metaplanet's daring treasury strategy is making significant waves, particularly across the Asian market, sparking discussions about a potential catalyst for widespread institutional adoption in the region. This bold move positions the company at the forefront of a new era for digital assets in traditional finance. Metaplanet has strategically allocated a substantial portion of its treasury to Bitcoin, signaling a strong conviction in the cryptocurrency's long-term value and its potential as a foundational asset for corporate treasuries. This decision is not merely about holding an alternative asset. It represents a calculated effort to hedge against economic uncertainties and to tap into the growing digital economy. The company's proactive approach aims to leverage Bitcoin's unique properties, such as its scarcity and decentralized nature, to bolster its financial resilience and growth prospects in a rapidly evolving global economic landscape. By embracing Bitcoin, Metaplanet is not only diversifying its balance sheet, but also setting a precedent for other corporations in Asia to explore similar strategies, potentially unlocking a new wave of institutional capital into the digital asset space. The implications of this strategy extend beyond Metaplanet itself, influencing market sentiment and regulatory discussions surrounding digital assets in one of the world's most dynamic economic regions. The company's commitment to this path could pave the way for broader acceptance and integration of Bitcoin into mainstream financial systems throughout Asia, marking a pivotal moment in the ongoing institutionalization of cryptocurrencies. This strategic pivot has garnered considerable attention from investors and analysts alike, with many observing Metaplanet's actions as a bellwether for institutional sentiment in Asia. The market is keenly watching to see if this move will indeed catalyze a broader trend of Bitcoin adoption among Asian corporations, potentially reshaping investment portfolios and financial strategies across the continent. But is this the only major strategy unfolding? Stay tuned as we break down the critical market indicators that are signaling a potential shift in Bitcoin's price trajectory. Bitcoin's correction engine revealed. New analysis indicates Bitcoin's speculative premium is cracking, with key metrics suggesting a correction could be underway, potentially testing crucial support levels. This deep dive reveals the underlying forces at play. The latest data reveals that Bitcoin's MVRV Z-score has fallen below its 365-day simple moving average, SMA, a significant bearish signal that historically points to a weakening speculative premium and increased risks of a market correction. This metric, which compares Bitcoin's market capitalization to its realized value, has consistently shown lower highs since its peak in March 2024, following Bitcoin's surge to over $124,400. The breakdown below this long-term benchmark suggests that the market sentiment may be shifting from aggressive bullishness towards a more cautious stance, potentially pushing prices below the critical $110,000 support level. Adding to this caution, the 90-day taker CVD, cumulative volume delta, indicates a fragile buyer dominance, with sell-side activity increasingly favoring sellers. This imbalance in market structure makes quick bullish reversals less likely and raises the possibility of prolonged downward momentum if selling pressure intensifies. While institutional demand and ETF inflows continue to provide a foundational level of support, they may not be enough to counteract the current bearish technical signals. Adding another layer of complexity, significant whale activity shows a mixed picture, with some large holders selling in the 101,000 BTC range, indicating indecision, while smaller retail wallets continue to accumulate. This divergence in behavior among different investor segments adds to the uncertainty surrounding Bitcoin's immediate price action. Furthermore, the market is showing signs of overextension in leveraged positions, particularly on platforms like Binance, where a high percentage of long positions could lead to cascading liquidations during periods of heightened volatility. Analysts are closely monitoring the $110,000 zone, as its defense is considered critical for preventing a deeper correction. Despite the bearish signals from MVRV breakdowns and fragile market structure, the underlying demand drivers, including consistent ETF inflows, suggest that the broader bullish cycle may not be entirely over, but immediate price action warrants significant caution. These technical indicators have sparked a flurry of discussions across crypto communities, with many traders and investors debating the severity and duration of the potential correction, with some predicting a significant price drop if key support levels fail to hold. But the market isn't just about technicals. Corporate strategies are also making bold moves. Get ready to explore DDC Enterprise's aggressive Bitcoin accumulation and what it means for their Treasury strategy. DDC Enterprise's Bitcoin power play, 1008 BTC acquired. In a rapid and aggressive move, DDC Enterprise Limited has dramatically expanded its Bitcoin holdings, securing over 1,000 BTC in just 1 month and positioning itself among the top global corporate holders. This strategic gamble is reshaping its financial outlook. DDC Enterprise Limited has achieved a significant milestone, increasing its Bitcoin treasury to an impressive 1,008 BTC, a substantial leap from its previous holdings. This aggressive accumulation strategy has propelled the company into the global top 45 public holders of Bitcoin, currently ranking 42nd. The average acquisition cost for this substantial portfolio stands at $108,384 per Bitcoin, translating to approximately 0.121298 BTC for every 1,000 DDC shares held. This strategic move underscores the company's commitment to establishing Bitcoin as a core reserve asset, with an ambitious target of amassing 10,000 BTC by the end of the current year. The company's rapid expansion in its Bitcoin holdings is a testament to its aggressive accumulation strategy, highlighted by 5 separate Bitcoin purchases made throughout August 2025 alone. This concentrated buying activity significantly boosted its reserves, with the latest acquisition bringing the total from 368 BTC at the start of August to a remarkable 888 BTC before reaching the 1,008 BTC mark. Norma Chu, the founder, chairwoman, and CEO of DDC Enterprise Limited, emphasized that crossing the 1,000 BTC threshold is a pivotal moment in the company's vision to become a leading Bitcoin treasury firm. The company's financial performance has also seen a positive response, with its shares rising by 8.9% following the latest Bitcoin purchase, reaching $13.88 in midday trading, reflecting strong investor confidence in its forward-thinking approach. This strategic integration of Bitcoin into DDC Enterprise Limited's financial framework is supported by its position as a prominent Asian food platform, managing brands like Day Day Cook, Nane Lim, and Yai's Thai. The company's expansion into digital assets signifies a diversification beyond traditional financial instruments and a belief in Bitcoin's potential as a long-term store of value. Despite current market volatility, with Bitcoin trading below $110,000 and experiencing fluctuations after recent economic announcements, DDC Enterprise Limited's consistent accumulation aligns with a broader trend of institutional investors scaling into the cryptocurrency market. This proactive stance, even amidst short-term market fragility, signals a strong long-term conviction in the asset class, positioning DDC Enterprise Limited as a notable player in the growing landscape of corporate Bitcoin adoption. Investor sentiment appears to be overwhelmingly positive, with the stock price surge indicating a strong belief in the company's strategy to leverage Bitcoin as a significant part of its future financial architecture. But corporate strategies aren't the only hedges against economic shifts. We're turning our attention back to Metaplanet and their significant $881 million Bitcoin investment as a strategic hedge in a weakening yen environment. Metaplanet's $881 million Bitcoin hedge against yen weakness. In a significant strategic maneuver, Metaplanet has committed $881 million to Bitcoin, aiming to fortify its treasury against the backdrop of a weakening Japanese yen. This move highlights a growing trend of digital asset adoption for currency hedging. Metaplanet has unveiled a substantial $881 million investment strategy centered around Bitcoin, positioning it as a critical hedge against the persistent weakness of the Japanese yen. This bold allocation signifies a major shift in how the company is managing its financial reserves, reflecting a growing confidence in Bitcoin's potential as a stable store of value and a hedge against currency devaluation. The company's decision comes at a time when the yen has experienced significant depreciation, prompting Japanese corporations to seek alternative assets that can preserve and grow their capital. Bitcoin, with its global reach, limited supply, and increasing institutional acceptance, presents an attractive option for such hedging strategies. Metaplanet's investment is not an isolated event, but rather part of a broader trend observed among Japanese companies exploring digital assets to mitigate currency risks and enhance their financial resilience. The company's treasury strategy involves acquiring Bitcoin directly, signaling a direct bet on the cryptocurrency's long-term appreciation and its utility as a safe haven asset in volatile economic times. This move is expected to have ripple effects across the Asian financial landscape, potentially encouraging other corporations to reevaluate their treasury management practices and consider similar digital asset integrations. By strategically allocating such a significant sum to Bitcoin, Metaplanet is not only diversifying its asset portfolio, but also making a strong statement about its belief in the future of digital finance and its role in safeguarding corporate wealth. The company's proactive approach in navigating the complexities of global economic shifts and currency fluctuations underscores its commitment to innovation and its readiness to embrace new financial paradigms. This substantial investment is poised to attract considerable attention from both the financial and cryptocurrency sectors, as it represents a significant endorsement of Bitcoin's role in modern corporate finance and a potential blueprint for other companies facing similar economic challenges. The market is closely observing Metaplanet's bold strategy, with many anticipating that this significant Bitcoin allocation could influence other Japanese firms to adopt similar hedging measures against currency volatility. And that wraps up our deep dives for today. But before you go, let's quickly recap the biggest stories we covered. And that's a wrap on today's explosive updates. We saw Metaplanet's big Bitcoin treasury play potentially unlocking Asian institutional adoption, Bitcoin's MVRV breakdown signaling correction risks, DDC Enterprise's massive BTC accumulation, and Metaplanet again, using Bitcoin as a strategic hedge against a weak yen. Don't miss out on any of these critical developments. Make sure you're subscribed, Hit that notification bell, smash that like button, and follow us on all social platforms so you never miss a beat. We'll see you in the next one.